Good morning to you, Ravi, and it's fantastic to be here on a Thursday morning this month of November. It's a series of podcasts, and as we were talking, hopefully videos that we'd get on, but we want it easy for people to consume. The speaker for today, or the person that I'm going to be chatting with for 15 minutes on Edge, is Ravi. And Ravi, I'd like you to say a few things to introduce yourself, who you are, and what you stand for.
Thanks, Arjun. It's great to be here. I was thinking about how we met, right? And it is, these human connections that we've missed so dearly through the last couple of years. And I think it's becoming clear that we are very much so, as a race, we are so social animals, right? It's harsh in some senses, but it was a reminder that we are very much social animals. We derive our energy from speaking to folks, being with folks, loved ones, learning from each other. Thanks for having me here. I'll give a very quick 30-second overview of what I've been up to. I come from very, very humble background, Surgeon. Did my engineering way back when, and I'll date myself, it's been a while. But this was before folks, today we hear about DALI and GPT-3 and how the future of work is changing, but this is way back when, and I did my engineering and master's in machine learning. It was magic to me when I saw it work actually on image recognition problem. Just completely fascinated by it. And so after Kanpur, I went to do this research in machine learning in Urbana-Champaign, but quickly realized, no, I want to do applied stuff rather than, something that I spend my life just, discovering stuff, which is actually also great. It's great for human curiosity, but I wanted to apply that stuff. So quickly finished that up and landed somehow. Again, it was a quick turn of events, very serendipitous. Landed at this firm called Jump Trading, which for the longest time folks hadn't heard about. Today we again hear about it a lot more in the context of Jump Crypto. This was way back when it was still a trading firm with folks and partners trading on the floor of the exchange. Given the machine learning stuff that I had done, and one of my partners, Sean, he did computer science, and we set something up in an automated fashion. Can we make this work without human intervention? So that set off a sequence of events that lasted more than a decade. Actually, set up their high frequency trading practice basically from scratch. Then once it was set up, and we replicated it out, multiple groups and so on. In fact, we were trading through the last financial crisis of 2007, 2008. It was a very, it was a bizarre and humbling experience going through that. Looking at how the relationships in the financial world, the relationships across institutions, how they are so strong, and those who feel so strong, and then until they're not, like until everything breaks down, and liquidity tends to be an issue. So, but while I was doing that, I started also. So this was in Chicago, by the way. So I've been there for about 2 decades. Some of my friends were coming back and they were setting up companies. And this was again 2008, 2009. And I said, gosh, I want to participate. I don't know what I want to learn. The one way for me to do is just become at least a passive shareholder to start with. And participation journey, which eventually I realized was angel investing, which I hadn't back then when I first got into it. Fast forward, I started realizing that this is what I like more than trading career, even though that was extremely challenging as well. Very, very intellectually satisfying. As an industry, we could see that it had matured. I love the space, and it is very it has a great set of contributions to the technology world and to the financial world and so on, of course. But really getting to work with very early stage companies, helping them grow, just learning from these passionate entrepreneurs. By the time I got about 24, 25 odd investments done, I realized this is what I want to do, but I don't know what. Venture wasn't as clear to me, but angel investing, I'd done enough to say that this is the space I want to be in. So left trading, and then we ended up taking a sabbatical and eventually setting up a micro VC firm about a year and a half later. So yes, it's been investing since then. Now I'm at Leo Capital. Purvi Capital still stays. It's a portfolio that's been deployed, and I'm making new investments through Leo Capital. We do early stage investments. This is longer than I thought, but it's I'll stop there.
No, it's a phenomenal journey. And I think, just being in Leo Capital, one of the things that I realized through our fantastic meeting point where we met at this event, I think there's a lot to gain from, just the sense of learning that you get while investing in companies. But having said that, everybody is about, the profitability, the growth of the companies that come in. And obviously, growth is very important at the early stage. And the discerning eye of how you look at entrepreneurs, what do entrepreneurs mean to ecosystem at large? And there's been much debate about how the US has done it, and then many other countries have followed suit. Where do you see India poised in that journey? Just a recent article said Zoho was the first billion-dollar revenue company coming out of India. In some ways, true, some ways, I think as a product company, it's been identified as sort of a bellwether. Where do you see India and its movement, the light of today?
Right, Arjun. It is, I've been, and I'll be biased because I've been bullish about the Indian ecosystem for a while now, but I've
Mm.
also been too early and a little bit wrong there. But that said, so because I was investing, like I said, more than a decade ago. But this point, you mentioned Zoho, right? And
Yes.
that's just one of the examples. There've been so many examples out there. Now it is, it's like we had this young economy, and India, as modern India, is not that old, right? It's still, we celebrated our 75th year of independence and whatnot. But from the tech ecosystem, from the startup ecosystem that we're talking about, it's still very, very early. But I think
Mhm.
we're at this stage now, very clear that the internal factors that are lining up, the global macro factors that are lining up, of course, US, you mentioned, has been at the forefront of innovation, and they continue to
Yes.
do so. The multiple pockets, there have been capital deployment that is also necessary to help ecosystems grow. And
Yes.
there are a few factors working very strongly in the favor of the Indian ecosystem today. One is, of course, the domestic capital has warmed up very strongly for this kind of, if you will call it, high risk investment, right? So we've seen it work, and in fact, discussing this yesterday in the team, that Indian allocator is now at the given moment in even the current downturn far more strong and bullish about the Indian ecosystem than global allocators, which historically, we've had FDI and outside capital coming into India and helping the ecosystem grow, but that is no longer the only case, right? So that is one very strong factor. We see from the government standpoint, and I know without getting political, but certain steps have been taken along the way. Like UPI was a great step, actually. GST was a great step, and when I say great, it is like a trigger to get stuff done, whether it's good or bad, right or wrong from a political standpoint. That's not what we're getting into, but just
Correct.
as trigger points, getting payments digitized, that creates this trail of data that can then be harnessed by tech entrepreneurs to do add on more value creation on top. So a lot of that come into the picture. Of course,
And it
we
gives
chat
it a
about.
lot of legitimacy, right? In terms of just
Yes.
your ability to, I mean, not just from an integrity of demand and supply economics, it's also about understanding a lot of the data points, the touch points that you get from that, which can service. One is from a government standpoint, but also, yeah, like you said, there are different businesses that can spawn from it that allow you to be a lot more sharp and a lot more informed to the consumer base that exists in India. Yeah.
Absolutely, absolutely. I mean, we kind of flying blind prior to that, if I may, right? There were certain
Yeah.
theories people had, but now there's data to back
Absolutely.
stuff
Yeah,
up.
absolutely right. You hit it spot on. We were flying blind. We just didn't know what was going on because of all the stuff that was not on the level. Yes, people judged the government for demonetization and the whole, stigma around what it created thereafter. But I think, if you look at a lot of the hard policy that has been brought in spite of the government or with the government in tow, I think there's a change. And the latest, I think the India Today conclave excerpts that I've been watching, I saw that we're also calling India the factory for the world, the office for the world, and it's got the youngest population in the world, right? And you have aging as a problem in the world as much as you have, climate change is the problem. Where do you see that contributing to a lot of the growth in the startup ecosystem? And when I say that, I primarily mean any of these startups. It's given that it's tech space driving things, right? I mean, tech is just an enabler. So how do you see that view of India coming in and playing out?
Absolutely. In fact, that is, like I said, that's one of the strongest tailwinds that we have today. So you should step back and look at the macro again. Asset allocation, a lot of the emerging market allocation was historically going to China, and it has slowed down for a variety
Correct.
of reasons. And one of the things that doesn't get talked about as much is the aging population,
Yeah.
right? And the domestic demand, both of which are very much favorable in India. And the Indian, I think the population is not only young, it is also far more, at this point, they're willing to take risks now at this point. And this is from a work standpoint, from a career standpoint. Of course, there was the BPO industry and so on, but that was very early. Now I think we've gotten into this innovation phase
Hmm.
where I see talent coming in, and not just the domestic talent, but I see folks who had moved abroad in search of opportunities, and not judging anybody, but that was the de facto and a kind of path. You study, and you try to find a good job, which typically ended up being overseas. We see a lot of those generation folks come back and create new companies, which also gives India a very the Indian entrepreneurs are very global in their outlook, which I think is giving a leg up because the domestic demand is so strong. If you build something for India, there is build for the right audience, there is strong pull in the market. And beyond that, if you build at global standards, I think that has also started to change in the last 2.5 years. Earlier, it was for better or for worse, for lack of resources, there was tendency to build something that would just work and be good enough. For today's entrepreneurs, good enough is not good enough. Actually, they want to be able to compete at the global stage. I think that is extremely
So
positive.
that's a great point that you made. For today's entrepreneurs, what is good enough is not good enough, right? So people are understanding the value of growth and scale, and it's not just a VC permutation that exists there. That VCs are forcing companies to think of growth. It's really the paradigm that shift that's required. And the topic of the conversation, I think we've been sort of going through a sense of what it is to the ecosystem, and I think that we talked about it as the shift, and I think you talked about also the consumer base and the consumption and the aging population as being two significant levers. But you brought this point up again, which I'm going to reiterate, which is the way entrepreneurs are thinking and thinking about growth and scale and building businesses. And you see that the nature of thinking has affected a lot of investment across the last couple of years. And yes, honestly, there was hyper liquidity in the market based on just a post-COVID push in one sense and a lot of speculation. And now we're going through crunch, which is affecting various businesses across the board. How do you see entrepreneurs who are focused on growth and building businesses? How would they function? I'm saying it from an India context where the market sort of dried up, very conservative, looking at much more detail. How would they continue to focus on the levers that are so important for companies? And I'm not saying it from a VC standpoint. I'm just saying to build.
That's the trillion plus dollar question, right? How, because you mentioned last through the lockdown and even following that, while there was a lot of bizarre dichotomy of events that we saw, there was at one end, there was this pull forward of demand, right? All the digital delivery and digital goods and so on. And on the other side, there was businesses were really struggling. There wasn't, nobody in their harshest of dreams would have imagined, right, what would have happened. Like we had this portfolio company who's not hyper growth, but they were profitable, they were growing, they were reinvesting in their business, and a lot of that was coming through the revenues. And overnight, that revenue stream went to zero. So it basically was an exercise of kind of a reckoning where you reinvent yourself entirely, and that is when you go back to basic principles. First principles, see what is everything that we're building, does everything contribute towards the long-term vision and the long-term goal? And I think that kind of reinventing of your thesis, kind of reviewing how we're doing stuff, and not just how we're doing stuff, why are we doing each of these? And I think we all went through this period of reflection as individuals, as companies. And I think a lot of the companies came out much stronger from there because the why was much clearer. I think anyone who was the why was weaker in the sense that they were just maybe building a business, running a business, not quite as passionate about it as they would have been or should have been, is what they realized in this reflection exercise. So I think that helped a lot. And from the once that is clearer, once your first principles thinking comes back and you say, okay, these are my big pieces that I need to get right, everything else is kind of been following. And that is why the ones that came out emerged much stronger. I feel we've also seen this in the workforce in a lot of ways, and I'm sure in your business, Arjun, you've seen this. Love to learn, hear from you what you're seeing. But what we're seeing is that there has been kind of movement towards a larger work-life balance, and this is true for individuals as well as companies. And you mentioned climate change before, and that is, we can talk for hours on that, just that topic. And it is getting very clear in the minds of people that we are here for a purpose, and we've got to do it responsibly. So that craziness or some sort of a rat race has, in some senses, I think, for stopped for good. Some of that will always stay there, but it's also kind of the lubricant of fuel, if you will. But there's a lot of thoughtfulness that we see in this work-life balance, in this desire to do right. And again, those are some trends that were emerging, but they have been accelerated through the last couple of years. People are very very cognizant of the impact, especially we talked about the younger generation in India, very cognizant of what the impact would be both on themselves, people around them, and on climate and earth at large. So I think that is a very positive impact I've seen from where side. I'd love to hear what you see in the workforce.
No, absolutely. And from a talent standpoint, what I'm seeing is that people are not as worried as they were in terms of security, taking risk, understanding changes in economic climate, consuming it. I think, and honestly, I would say just as COVID hit in March, April, May of 2020, it wasn't as it is today. So when we are going through economic, constraints across the world, and you can see, layoffs going through the roof. People are just, holding the reins, very taut and very relevant to their situations, justifiable or not. But people, the talent, the workforce in India are understanding some of the rationale behind it, realizing that there are mistakes that companies have made, honestly, to get to this situation, and working with the companies through deferment of pay, salary cuts, sort of, various instruments of compensation in lieu the company turning around, which is great because they have entrepreneurial spirit. They are understanding risk. They are understanding the mission, the vision of the business. It's not just some writing on the wall. They're defining it into a mantra that they can believe in and standing by the entrepreneur's sense of building a business. And goes back to this wealth creation, right? I was with a very successful entrepreneur and good friend of mine, got to know him in the recent past, a brilliant individual, very sincere in their thinking, created a lot of wealth. And the one thing that he left me with is that whenever you finish with one journey, start another, because you need purpose. You need your back to the wall. You need to be creating opportunities along with building something of value. And you might fail at that, but if you have something to really work at, which is really that purpose that drives you, then you're there. Because after a point, it's the same hamburger. So at a level where I looked at it, and this is not a fly by night, it is serious amount of money that one has created, which allows somebody to sit back for the next 5 generations. But having said that, I think what I realized through it, it's a byproduct where I see the workforce, they're realizing that money is a byproduct and goes back to your mind, your wallet, and your heart. How do you apportion these three elements into your professional and your personal journeys? And that becomes really, really critical. I'm seeing it with the talent here. Product building also has sort of changed and evolved to a degree where we are now building through the fundamentals that you said, right? I think that's really something that's coming out, popping out in some of the companies that I'm sure you're seeing at the early stage with their idea sets, when they come forward, believing that they're going to change the world so radically. And honestly, before it was probably a journey for VCs to listen to companies where you're seeing maybe 1 out of 100. Now you're probably seeing that ratio change and shift because you're eager to pick many more, but obviously you're wondering whether it is the right thing to do based on your fundamentals, right? So yeah, I see that happening. I just want to ask you one last question before we close. When you look at companies and the sort of the climate here, with a lot of the, I think, the effects from the layoffs that are happening in the rest of the world sort of at some level petering into India, and you're seeing it across some of the larger companies, which are signals to what's to come. Do you think there's going to be a situation where a lot of the VCs are going to downvalue the companies that they've invested in, reset sort of, and then go from there versus investing in newer startups?
That's a tough one, Arjun. Yes and no. So one thing is, as far as the reset goes, right? I think it's inevitable. We will see some of that. Some of that is already happening at the later stage, right? So in fact, I was in the public markets before, and I follow that a little bit still. So that reset happens in public markets instantly, right? So as it continues to go through, wisdom of the crowds kind of is dictating, and the information flow is very, very strong, and that liquidity dictates that reset those numbers quickly. Now, from an allocator standpoint, I'm still taking a step back before the VC asset class, is that the public markets have reset and the private markets haven't quite as much as they should, because again, they're much slower. They happen, let's say, quarterly cycles at best, whereas public markets are daily and minute by minute. So that is happening. What I see more, maybe instead of a reset or a downgrade in valuation, perhaps what we would see is it'll just take longer. There'll be, what we're seeing and quite likely to happen is also that we'll see a plateau of these valuations, right? So we had a very strong upswing in price increments in the last prior months, years, especially 2020, late 2020 and 21. That is plateau, right? So what is required is for the companies to grow into the valuations that were already discovered, so to speak, and those were expected. I think that is more, we're hoping that is the slightly better outcome from this, rather than full-on reset, what we've seen in the public markets. Now, of course, the requirement here is that for the plateau to be achievable, is that the companies are capitalized enough. Right? So that is important. If the companies aren't capitalized, private companies, early stage companies, the next round down is basically zero, because you have to realize if that's if you're not going concern, then but that said, I think companies are doing all they can to kind of be able to grow into that valuation. There are, of course, round extension that we've seen for sure that is happening, and that'll contribute to this plateauing. Early stage where we operate, it's also, and you've seen this, it's hard to have a haircut, right? For larger companies, they're typically better positioned to have a haircut and continue to grow. Of course, we're seeing all these layoffs, as you mentioned. For younger companies, it comes back to, it's more of a, it's a psychological barrier. It's not a financial barrier actually most of the time. It's more of a psychological barrier, and some of that is being reset, of course. Plateauing will happen. That is what we are seeing, and some of the growth that had been pulled forward, we will eventually grow into that. That's the goal. And maybe, and I think some of it was, in hindsight, was unsustainable, right? We all
Great.
see, and we're all kind of waiting for the music to stop, and we're, but while the music is on, everyone's going to dance, and that's what
Yeah.
was happening
Yeah.
last year.
No, absolutely.
Hope we don't see a plummet. Early stages also, there are some folks who are well capitalized that are actually recruiting while the big tech is laying off. In fact, there was this reporting by Wall Street Journal, I think early this week, is that as big tech is laying off, earlier stage companies are nabbing that talent and helping them grow faster.
No,
So there's
absolutely.
that
I think there's been a lot of correction in terms of salary scales, expectations, quality of talent available. The shift has been from supply side, which was, I think, very evident during the 2021 journey. But I think 22 has given a lot of that effect and impact to correct. And that's the nature of the market, I guess. Some of it is just bad management across the board, when it comes from countries and governments to companies and their workforces. I think there's a lot to just think about the shift in balance that happens, and people don't realize, like revenue and margin cycles, these are very big constants that just allow the balance to continue to exist. Otherwise, it just blows up. So hear you on it, and I think what you was said was very profound from a takeaway standpoint. One is the reflection of the capital markets, public markets is instantaneous reflection of where India stands in terms of product companies and where it's poised for growth, with the talent itself looking a lot more sincere, a lot more delivery oriented, product oriented, and not as risk averse as they were before. I think a lot of people are taking it to the front, and that's a great sign for the country. Age of the population in favor of the country, the youngest population in the world, and India as a market itself for a lot of these products to be tested out, right? Clinical experience, you get the best here. I think that makes a round of applause for what we have. And thank you, Ravi, for spending the time. I think it's been very important also through this short session that we've had, for the people who are going to listen to it and learn, like I have, and I continue to engage with just the mindset. It's very important from a learning mindset to understand from a different perspective, and your lens has been very, very good to just put it in perspective. So thank you for your time, and thank you for spending this Thursday morning 15 minutes on Edge. Thank you.
Thank you, Arjun. Thank you for having me.
Cheers.
Bye.
Bye.